Hey guys, it's Kyle Whissel, one of the partners here at Y Street Capital and the Self Storage Fund. I'm really excited to just dive in today, just give you guys a quick little update, kind of where we've been, where we're at, and what we're excited for in the future. Joined today by Victor, by Amy, also part of Y Street. Guys, welcome.
Yeah, thanks.
So yeah, I mean, I want to dive in the self storage space. I just for watching this, if you are an accredited investor, we all know this, right? If we're investing, we need to have some diversification where we're investing those funds. I know over the last few years, a lot of people have gone very, very heavy into the multifamily space. Multifamily has been very sexy. A lot of people are maybe not so sure about how those multifamily investments have gone these last few years. Whereas those that have gone into some of the alternative spaces that are a little bit less competitive, a little bit more specialized, in particular, things like storage. And when we say storage, we're not just talking about self-storage, we're talking about all different types of storage. We're talking about self-storage, outdoor storage, boat and RV storage. There's so many different segments of that storage space. And being able to dive into some of those niches where the opportunities are. I'm out here in Nashville right now at my lake house, and there's a massive shortage of boat storage in this area. There's lakes all over the place, but there's not enough storage for all of these boats. So, understanding the different markets and then understanding where the need is within those specific markets is really where that opportunity is. And being able to partner with the team at Y Street to capitalize on those opportunities is a piece that you need to have in that investment portfolio.
Well, that's exactly right, Kyle. I mean, one of the things that we focused on when we launched the storage fund, we focused on understanding what's happening in the marketplace. I mean, traditionally, storage has been one of those industries that was a mom and pop business. It was very much a cottage industry. And many institutional investors all of a sudden woke up and realized, wow, this is a pretty lucrative space, and really started to play in it in a major way, especially in primary markets. A few years ago, institutional players owned about 15% of the market, and 85% was still mom and pop. Today, it's 75% mom and pop and 25% institutional. That institutional piece is growing to the point where today in most primary markets, they are indeed saturated with a lot of shiny, brand new Class A product, which means that rates are falling. Those markets are actually, in many cases, oversupplied. So where is the opportunity? It's in secondary and tertiary markets. And like you said, in some of those vertical segments, like boat and RV, like industrial outdoor storage, that's where we're very focused, and that's where we've been playing over the last year and a half. We're excited to bring new products into the fund over the next several months, and we're actively in construction on one project. We're about to get into construction on a second one, and we'd be delighted to have you and some of your other investors join us for the journey.
Awesome. Yeah, Amy, do you want to give us an update on some of the specific projects?
Yeah, absolutely. So as accredited investors, if you come into the self-storage fund, yeah, you automatically start to receive your pref equity on these projects. So as Victor said, we've got some industrial storage happening. We've just turned in permits for an outstanding project in Houston that we're really excited about, that has a really strong feasibility study. We're currently right now due diligencing and looking at some existing storage that would be a value add, just a more of an operator push instead. That is a great way to increase and just get it filled and get it going. So one other part that's really exciting is have on the flip side, from the sales side of things, we've seen these large REITs that were in office and retail, and they have converted their funds to go to self-storage for acquisitions. So on the flip side of that, we are also getting REITs saying, hey, when you have those built, when you have those ready and stabilized, we're ready to buy those from you. So I think that's always great to jump into an asset class that, one, is making some good cash flow. And then the second part, we have an outstanding exit plan of really strong buyers that are ready to buy them. So
yeah, I think the amount of dry powder out there right now, I mean, it's insane how much money is sitting on the sidelines waiting for those opportunities. And there's people are so skittish of the office space. In San Diego, our downtown is sitting at like 30+% vacancy. It's like, who wants to put money into that? And people are trying to figure out, how do we convert these office buildings into residential? I mean, people who figure that out will do well, but for the most part, people don't want to take that chance. They'd rather go with more of a proven asset in storage, which has been around since the beginning of time and is going to be around for a long time. And so I love that side of it. And then what you mentioned with being able to come in and clean up operations, because you still have a ton, right? I think Victor said, 75% are still mom and pop. There's still a lot of that out there. And so many of these people, we run into, they're good people. They feel bad raising rents, and they've owned these things for so long and they're making good cash flow, but they haven't raised rents in years or decades in some of these buildings. So being able to come into these buildings and put in the proper operations in place and getting rents up to market, there's massive upside simply by churning an operation around.
Even as simple, even as simple as they don't even have, some of these sites don't have a current website, or their rent arbitrage. They're not increasing the rents off of product units that are available or what's the highest demand. So just even entering into that type of communication can absolutely be a game changer for the productivity of the asset.
One of the things that we've really sharpened our pencil on since launching the fund is exploiting global supply chains. And when you say that phrase, a lot of people just think Asia. They think, oh, they're just going to China. And well, that could be one possibility, but there's actually a surprising source of supply that most people don't think about. And we've spent considerable time and energy in Turkey. And the reason for that is that Turkey is a country that's been experiencing hyperinflation for a number of years, and they have extremely high quality manufacturing. And we are exploiting that source of supply for projects here in North America. And we're talking about product quality that's really top shelf, better than we would actually manufacture in North America. For, the material costs are maybe a quarter of what we would pay the equivalent in North America. And so we're actively working, getting bids and quotes right now from several suppliers in Turkey for the storage wall units, for the exterior fencing, for roofing materials. Some of the products that we are sourcing are incredibly inexpensive and just amazingly high quality. So that's one of the things that we think is actually a game changer, is not just picking something that's cheap, but something that's super high quality and buying it for less than we would in North America. That's a game changer for us.
I love it. Cool. Well, if you guys are watching this video, if you are accredited, you're looking to put some money into storage, this is the team that you want to have behind you. So if you're watching this, reach out. I'll connect you with the team. We'll go over all the details, make sure it's a fit for you. Look forward to hearing from you.